What is up, you guys? Welcome to session number 94. Do we have a session for you guys? So over the weekend, guys, we had some spectacular news come out, and we had the United States and China coming to a truce, guys. A 90-day truce, lowering both the countries' tariffs on each other. So we'll dive in. Dow surges today more than 1,000 points after China and US agree to temporary tariff cuts. So we'll dive into this article and then dive into the portfolio, guys. So US stocks roared back on Monday after US and China agreed to temporarily slash tariffs following negotiations over the weekend in Switzerland, raising hopes a trade war won't push the economy into a recession. The Dow Jones Industrial Average surged over 1,000 points, or 2.6%, staying near its highs for most of the session, with buying enthusiasm remaining strong. The S&P 500 popped 3%, bringing its gains since its April intraday low at the height of tariff pessimism to more than 20%. The benchmark has cut its year-to-date losses to just 0.9%, guys. The Nasdaq Composite adding 4% as initial China agreement sent technology stocks tied to the country like Tesla and Apple flying higher, guys. So very good news for the market. We had Treasury Secretary Scott Bessent on talks today with China. Very productive, and both countries had agreed to cut tariffs temporarily. U.S. tariffs on Chinese goods were brought down to 30%, guys, and Chinese tariffs on U.S. imports were slashed to 10%. Bessent told CNBC Squawk Box today that he expects to meet once again with representatives from Beijing in the next few weeks to start ironing out a bigger agreement. Very big news, guys. Very big news. Obviously, we have this deal 90 days to try and calm things down, and then we're gonna pave the way to hopefully get a bigger deal, which is very bullish, guys, for the market. We had Tesla jumping 7%, guys. We have our Tesla bull shirt on right now. You could get that at the mogulfellows.com store, guys. While Apple and Nvidia gaining 6% and 5%. Shares of companies that rely most on Chinese goods, guys, rallied the most, like Best Buy up 6%, Dell Technologies climbing 8%, and then Amazon leaped 8%, which is big for Amazon because most of their sellers buy stuff from Chinese manufacturers. Best Buy and Dell too. So we have markets rallying because investors are surprised with the velocity of the Chinese trade tariff deal, and that was said by Jeff Kilberg of KKM Financial. Last thing here, we'll get into tensions between China and the U.S. reached a fever pitch in April after President Donald Trump raised tariffs on China to 145. Beijing then retaliated with 125 duties of its own targeting U.S. goods. The S&P 500 nearly closed in bear market territory last month, down almost 20% from a record set in February following Liberation Day announcement. Stocks then recovered as Trump dialed back the extra reciprocal rates on most countries outside of the China in a 90-day pause. So we've been through a lot, guys. Been through a lot since Donald Trump has became the U.S. president. Obviously, China's been taking advantage of us for a long time on trade, so he wanted to really dive into that and get that fixed for our country, guys. So we're seeing a good job with these tariffs. Obviously at the start they were kind of hairy, for the markets, not very bullish, but as these trade deals get announced, guys, we're going to see a lot less volatility and hopefully turn around this bear market and uncertainty, fear, uncertainty, and doubt that we are seeing with these trade wars, guys. So these trade wars are getting turned into trade deals, and that is how these tariffs. We're the #1 consumer in the world, guys, and a lot of people come here to do business, and when we have tariffs set on their product, really upsets their business as far as pricing goes, their margins, and when prices surge and we don't want to buy it anymore, and that means those businesses that do business in our country go out of business. So a lot of these countries that want to bring product here obviously want that to keep going, and China does really big business here, and so when we hike a big tariff on them, they obviously need to give us something in return, and that is where these tariffs are coming into play. It's more of a leverage to make deals, guys, and that is what Donald Trump is known for, as you've seen in his first administration. So guys, if you look here, guys, we have the S&P 500 SPX. This is looks like the 4-hour chart here. We see around February really coming down below that 200-day moving average, down to a low of 48.35 for SPX, and that was mainly due to FUD with these tariffs, these trade wars, and since the low in April, we are now seeing a really recovery, especially recently, since we had the UK deal last week, really bringing up the market, and then this 90-day deal over the weekend to try and get a bigger deal is really booming the market, guys. So we see it really coming up above that 200-day moving average on the 4-hour chart here on SPX, which is very good news. Hopefully we return to a absolute bull market here like we were in. If you see before, we were cruising above the 200-day, cruising above that 200-day moving average until that FUD came in during the trade wars. And now as we see more clarity with these tariffs and stuff, and really good news, really good news for the Federal Reserve. So we could hopefully get the Federal Reserve to cut rates, we could get money cheaper to borrow, and our economy will boom here soon, guys. So really looking good as far as trade goes and the markets. So we have the portfolio, guys, at a 27.5 here. Our open P&L is now in the green, guys. We've been in the red for a while. We have only around 8 stocks in the red here, and that was a complete shift around from what we were seeing in the past few months, guys. So we have a lot of stocks ripping here that we're going to be trimming today. And then we're going to be adding into 2 stocks today, since we missed last week. We were sick. If you can't hear my voice, I'm a little recovering from COVID-19. I had COVID-19 last week, and a bunch of allergies in the Bay Area, guys. So I'm still recovering from both those things. But we are back, and we have the account, as we were saying, at 27.5 here. We have market value at 13.5 and cash balance at 14 here. So we are pretty hefty, and we're going to be opening up a lot more capital in that cash position as we trim here. And then we're going to put the as this is our trading count, Mogul 30 trading portfolio, and then whatever profits we make from this account value, we slide over to the Mogul pot, guys. And you got to be a member of Mogul Fellows to be able to view that Mogul pot, our long-term account. So go over to mogulfellows.com, check out membership. All right, guys. So we're gonna be trimming. Let's switch the song here. So we're gonna be trimming today, guys. So the first, we already wrote down what stocks we're gonna be trimming. We're gonna be trimming 2 shares of Tesla, and Tesla is really ripping here, guys. Obviously really good news with Tesla, and with this trade deal, and obviously we have robotaxis coming out. We have a bunch of different stuff that's analysts are finally factoring in robotaxis and Model Y, and we're going to start with robotaxi and then eventually to the cybercab, and going to be rolled out here in Austin, Texas. So and hopefully here in California, the Bay Area, possibly Florida to start and such, whatever states have less regulation to start with, and we're working on that as well, where this administration is very robotaxi friendly, and we're going to try and get less regulation as far as Tesla goes and everything. So anyway, this is our Tesla trading position. As you know, we have our Tesla to Mogul program going on right now in the Mogul Pod. So if you want to see our whole case study and everything, you got to be a part of, a member of Mogul Fellows. So mogulfellows.com. All right, guys. So we're gonna go ahead and trade 2 shares here. We're gonna trim 2 shares. Sorry, we have 5.32 shares. We have an average price at 272 here, 98, and we're gonna go ahead and trim 2 here. So let's go ahead and do that here. Oops. All right. All right, guys, let's go ahead and trim. Boom. We got locked in at 317.10. 317.10. That puts our profit for Tesla. Let's go 317.10. Subtract the average cost here. $44 per share. We had 2 of those. All right, guys, $88. All right, starting off with $88, guys. That is 1 out of 4 stocks we're trimming today. Let's go ahead. Our next stock, guys, we're just gonna cruise on this, is NVIDIA. And we have, obviously we had Tesla. I forgot to mention 75 RSI level, way over bought. Perfect time to trim. NVIDIA, we have at 71 RSI level. We have it trading at 122, and we have an average price on NVIDIA at 109.98. We have 11 shares. We're gonna go ahead and trim 3 of these guys today. So let's go ahead and trim 3 shares of NVIDIA. Go ahead and do that here. All right, 122.69, guys. Let's go ahead and do the math on this one now. That is 122. Our sell price here, 122.69. We subtract the average cost. That is 109.98. That is $12.71 per share. We had 3 of those. Times 3, 38.13 total here. So we're already trimmed 88 on Tesla, 38 on NVIDIA. Moving on to the third stock we're gonna trim today, and that is Robinhood, guys. As you know, I went to the very first Hood Summit in Miami, and it was so fun, guys. Went with a coworker of mine, and we had an absolute blast. I definitely recommend going to the next one. I hope I could get time off to be able to go to the next one here this fall, but I had an absolute blast. Vlad Tenev, CEO of Robinhood, really came out with a bang. Had a great time, partied, learned more about Robinhood's products. Got to meet Vlad himself, which was amazing, and it was a really good time, guys. Definitely recommend going to the next one. But we are going to be trimming here today. We're going to trim, I think. Let's go ahead and trim. I haven't decided how much I want to trim of hood right now, but we're gonna do, we have it at 43 average. Let's go ahead and trim 3 of these. All right, trim 3 hood. We have it, trading at a 73 RSI level on the 4-hour chart. That's, considered overbought. So we're gonna go ahead and trim 3 shares, guys. All right, we got it at 57.21. All right, do some math here, and 57.21 our sell price. Subtract 43, 43.16, 43.16. Yeah, 43.16. 14 per share. We trimmed 3 of them. That brings us at 42, guys. 42.15. All right. 88.24 Tesla, 38.13 Nvidia, and then 42.15 hood. We're trimming 1 more, guys, and that is Amazon, guys. We have 4.7 of these guys, and we see it really ripping at an 81 RSI level. Obviously, Amazon really exposed to the China, and they all the sellers on its platform on Amazon.com. They get all their stuff from China. If I were to sell on Amazon, I'm going to be buying cheap stuff from China to be able to flip it here for a higher cost, guys. If I buy, say I buy these sunglasses here for, $2 and then sell them for $10, that's an $8 margin here, guys. So, whereas that here, if it was made here, it'd probably be $7 or $5 to make. So margins are a lot bigger if you get, your product from China than here. So that is why a lot of sellers on Amazon buy their stuff in China, sell it here, bigger margins, more money for them. So Amazon really popping here, be on the news of the China trade deal news, and obviously trade deal with UK as well last week too. So let's go ahead and trim. We're gonna do 2 of these, guys. 2 of these, obviously 81 RSI. We're gonna probably trim a hefty amount. What we have 4.7. We're gonna do roughly almost half, but let's go ahead. Amazon 191.99 is our average cost. Let's go ahead and trim 2 of these guys. All right, that's got filled at 208. What was it? 208.79. That is a total of 208.79 here. Minus 191.99 our average cost. 16.8, and we trimmed 2 of them, brings it to 33.60, guys. So if we add this all up, guys, let's go ahead and add these up. So we had 88.24 Tesla plus a 38.13 profit on Nvidia, brings it to 126.37 already, guys. Then we add hood, which is 42.15, 168 now, 52, and then we add the 33 profit on Amazon. That brings it to a $200, guys. 202.12 we trimmed today, and that is going straight to the motor pot to to put towards our case studies and research on these companies and investments, long-term investments. You can find all our case studies in our membership. Go to mogulfellows.com. Really fun to do those case studies, guys. We, pick one stock to dive into, do a case study, do in-depth research. We do our target pricing. We do ask questions, like research questions, and then we analyze on those research questions. So, right now, we're doing, Tesla. And if you want to see that case study, you got to be a member. So yeah, guys, $200 trim today. Now we're gonna do some buying, guys. We're gonna do some buying. Obviously, everything's ripping today, so there's not really many deals as far as RSI goes. RSI indicator goes, like no oversold levels, but we are down on 8 stocks still, guys. So we have Exxon Mobil 64, not really a deal. We have Chipotle at fair value, that could be a play, guys. Johnson & Johnson 47. Obviously people are getting out of Johnson & Johnson, putting it more towards tech now. We have Lulu 79. It's ripping and we're still down, so that's not a deal. MGM 67, not a deal. And I'm looking at the RSI level, guys. Ford 67, not a deal. YZ at a 70, almost at that 200-day here. About to rip past it, so we'll wait on XYZ. And then we have Nike at 70, guys. So I think right now Chipotle. And then I also wanted to look at Google. Google's at a fair value range as well. So I think since we missed last week, guys, from being sick, we're going to do 2 stocks today, 2 buys. Very rare that we do that. We only do 1 buy a day. We do the live trading session, recorded trading session on Mondays. And then all the other buys are Tuesday through Friday. And then if you want to get those trade alerts, you got to be a member. mogulfellows.com, guys. Go check it out. Become a member. All right. So we're going to go ahead and buy $50 of Google here. That is fair value range here, 53. We're about to hopefully rip past that, 200. They obviously got hit, last week. We had Eddie Q, service chief of Apple, really come out and, saying that their search engine is no longer going to be a part of the Safari app. Safari app on Apple is going to be going towards more AI. They're going to go with OpenAI, Perplexity, and Anthropic to give to their iPhone users. So that is going to be the future of the Safari app. So they took a really big hit. He said, search engines are going to be dying here, and it's all going to be AI. So yeah, guys, think about it. Like, would you, rather ask a question towards Google? It's been around for a while. Obviously, you got to scroll through like articles and, trying to find your answer. Or would you rather go to something like OpenAI, ChatGPT, or, XAI, Grok, to be able to, ask, your in-depth question? It just gives you it right there. It searches for you what you would be doing on Google, and it spits out an answer for you, guys. So that's the future, guys, and that's what Apple really said, Eddie Q. So that's why Google got hit. We still think, Google is a play. They have YouTube. They have other things like Waymo, self-driving cars. They got, it's a big parent company, guys. Google, it's not just Google, it's Alphabet, guys. Alphabet owns Google, Alphabet owns YouTube, Alphabet owns, Waymo. They own a bunch of different stuff, but they're also coming out with their own, guys, their own AI, Gemini. So that's going to be a, key player for Google in the future as well. Obviously, all these different AI LLMs have their own, app. I think that's going to be what Google is going to be going towards now. instead of trying to pay billions of dollars to Apple to be able to be put on Safari to access iPhone users. iPhone users will just download the Gemini app, just like I download the Grok app. My friend downloads the ChatGPT app. It's going to be personal preference, guys. So I'm not worried about Google. Google will, they have a great balance sheet, great financial statements, so they'll be fine. Obviously, we see it at a fair value range, really ripping back up to the 200-day here, with the 50-day about to, run hopefully above after this, tariff news. So yeah, we're gonna try and add in here. So let's add in $50 in Google, guys. All right, we got Google at 158.61, guys. 158.61. That is our first $50 buy. We're doing a second because we missed last week. We were sick, so we're gonna go ahead and do another fair value range. None of these stocks are in, oversold values, guys. We see the market really ripping over 1,000 points a day on the Dow, so it's gonna be hard to try and find a stock that is going for oversold value range here. So we're gonna go with Chipotle. Obviously Chipotle, everyone's got to eat. It's when you want to eat out, you want to try to be healthy, it's the best option. And we see Chipotle really slinging their bowls and burritos over there. So let's go ahead and add into Chipotle at a 47 RSI level. We see it really trying to stay above that 200. It keeps bouncing, and we think Chipotle will figure it out here. So we're gonna go ahead and add to Chipotle $50. All right, bought Chipotle at 50.52. So that is pretty much one share, guys, that we added into Chipotle. Literally 53 cents off from the daily buy. But yep, those are our two buys, guys. We did Google and Chipotle today, and then we also made some trims. First time in a while, guys, just because a lot of FUD in the market. We had trade wars going on, and now we are the world's becoming more friendlier towards trade. And so the big one was China, and that's what Donald Trump really wanted, was to put China in its place, guys, with trade. So we had to put him in a crazy position for them to really negotiate with us and to really get a deal going. And obviously this is not a big deal by all means. It's a 90-day pause on these crazy tariffs that that we both countries put on each other, but really it's to really pause to try and create a bigger deal within the 90-day period, because obviously both countries need to be able to do need to make money, guys, especially China. China's in a worse spot than us because we are the consumer over here. They need to do business over here. We never really do business. Only rarely we do business in China, and so we have the leverage here. That's why they needed us more than we needed them. But we're going to use that to really negotiate other stuff, such as like we want to be able to do business in China because they don't really allow us to, some of the regulations. The fentanyl thing, guys, they make a ton of money on fentanyl and poisoning our youth, guys, selling it to countries like Mexico or whatever, and then those countries sell it to our youth, poison our youth, which is really bad. So obviously there's that as well. There's a bunch of other stuff that Donald Trump might do as far as China goes, but we'll see what President Xi Jinping does and what Donald Trump does. And then obviously we need these other countries as well. The EU might be harder than China because they got a bunch of regulations as well. We did UK last week, maybe India here soon. We're going to be rocking and rolling here, and we're going to be seeing a crazy market, hopefully, as long as everything goes according to plan. But yeah, guys, that is pretty much session number 94. I want to thank you guys so much for watching. If you're not subscribed here yet, please consider subscribing. And do me a favor, guys, smash that like button for the YouTube algorithm. Really helps me out. And then if you guys want to be a member, if you guys like this content, you want to be a part of Stock Market Club, want to be a member, go ahead and go over to mogulfellows.com. Check out membership, guys. Thank you guys so much for tuning in. Hit the outro.